So let's be honest, Peloton's been on a journey and it has not been fun. And this chart pretty much summarizes it. COVID, stay home, gyms closed, more COVID, back to normal. And that brings us to now. A company is trying to show they can stick around for a long time, that they can be a successful long-term play, but their backs are against the wall. And I want to talk about everything Peloton's doing to change their future and to be successful and stick around for a long time, but also talk about if it's enough. But first, I am not a financial advisor. I'm just a guy that likes to dabble in the stock market, but more importantly, I am very interested in connected fitness and all different companies and what they offer. So these two things coming together make me very interested. But do not buy Peloton stock or sell it based on what I say in this video, but hopefully you do feel a little bit more informed by the end. So current state, Peloton has lost an extraordinary amount of value, and they are doing everything they can as fast as possible to change that and make it so that they can get back to being profitable. So let's break down everything they're doing really quick. Round after rounds of layoffs. They were overstaffed and they had to let people go. A lot of people. Original leadership team has been pushed out. While they might have helped build Peloton, a lot of people's view is that they've also helped put Peloton in their current situation. Implementing a rental program. So not just the buy the product and now you're part of Peloton, different ways to get people into the Peloton experience. Launching new products, creating a Peloton line instead of just the bike. So they have the bike, the tread, the guide, the digital platform, and now the rower, or Peloton Row. Striking deals with Amazon, Hilton, and Dick's to get their product out there more so people can experience it and have different ways of buying it. Working towards self-assembly of bikes, which makes it easier to move product, but also cheaper. And also shut down expensive building plans and outsource manufacturing. And I hope you're enjoying the video, and if so, hit that like button for me. So this is a lot of change. Peloton is doing the things they need to do, cutting costs while focusing on subscriptions. And once that fat is cut, they sell more product and they get more people paying that monthly subscription. This company is ready to take off. Well, not so fast, because here are some of the things that they are dealing with. As of Q4 2022, Peloton has around $1.4 billion in cash and equivalents. That sounds like a lot of money, except they are losing a dramatic amount of money every quarter and eating into that 1.4 billion, and it's disappearing quickly. And on top of that, restructuring and letting people go costs money, and that's going to continue to eat at it before things get better. And they're forecasting that they're going to stop losing money around Q4 2023, meaning they somehow have to survive on limited cash for quite a while. And this is where it gets tricky, because if I forget all the numbers I just covered and think of Peloton as the brand, as the company, as the experience, they're one of the best. They have a huge following and product line that continues to expand. Their content, user interface, and overall experience is largely unmatched. If they dig themselves out of this hole they dug and reduce cost to operate, they could be highly successful and see the company grow again. But that cash will only last so long, and even in a good economy, this would be a difficult turnaround. They are right on that edge of being able to survive or fail. But most assume a very difficult economic period is in front of us, and this is going to make it only harder. On top of that, if they do start to run out of money and they need to borrow, that is not going to be cheap, and it's going to dig an even deeper hole. And I'll be honest, I was starting to feel a little bit positive about Peloton. They're making so many changes. They're really working hard to restructure. And the launch of the rower, I thought was something that might help catapult them, show that their product line is expanding, they have a new offering, a lot of people are going to want to buy it, and I feel like they really missed the mark on the price. And I ran a poll. Let's just take a look at this real quick. I said, now that the Peloton Row is out and you've seen the price and features, I am more interested, equally interested, less interested, and I've already ordered it. 1% says they've ordered it. Nobody's buying it, according to my poll. I am more interested was at 12%, equally interested at 12%, and less interested at 75%. And that says so much. That's a lot of people that had a level of interest that were considering buying it and said, oh, I no longer like this. The price, the features, the things I realized at launch, I'm out. And that's not good when you're a company that needs to sell product and get more subscriptions going. So from where I stand, this very, very much looks like a company that could fail, and a very speculative stock purchase if you decide to do so. But my gut says they make it. In many ways, Peloton is still the best at what they do. Leadership thought those pandemic-based numbers were going to last forever and made some very poor decisions based off that. But current leadership is working extremely hard. They are doing everything to turn this around, cut costs, and get to the point where they're profitable again. And I like what I'm seeing and all the changes that they're making. They increased the subscription price, which I know a lot of people are not a fan of, but a company in this state, it's going to help bring in more money. They're getting their bikes and Hiltons across the board, which again should help bring in more subscription revenue. And they're offering their bikes in more locations, so hopefully they can sell more bikes, but more importantly, get more subscriptions out there and continue that cash flow that provides. And hopefully through all those means, they're able to boost their subscription and help out from that perspective. But on top of that, people that have a Peloton absolutely love it. They are probably not going anywhere. There's always going to be a little bit of churn, but for the most part, anybody that has a Peloton loves the experience and is probably going to stay and continue to pay that subscription overall. So really what it comes down to is how quickly they can get their expenses under control so they can pull through this. The next couple quarters are going to be very interesting and tell a lot. But what do you think? Do you think they can pull through this? And would you consider buying this as a very speculative high upside play? Let me know. I'm very curious on what everybody out there thinks. But I hope you found this helpful. Smash that like button for me. Subscribe to stay on top of everything in the health and technology space. And until next time, here's to a healthier you, and have a good one.